Next in the series of this playlist, we're going to talk about volume patterns. So yes, this is going to be a nice strategy to use in the market. So this is going to be one of your tradable VPA setups for sure, because it happens all the time. There's a couple other things that I might want to add, like the loss of momentum is one of Gann's rules. Gann has a rule for this as well. It's basically when at the bottom of a trend or at the top of a trend, if the moves get smaller, start getting smaller, that's basically called the loss motion or momentum pattern, and that it goes like it comes back. So let's actually talk about the stopping volume. Is basically the same thing. So it signals strength and momentum shift in the trend, stopping volume pattern. So you want to look for lower wicks that are deep, indicating a thing. You kind of want to see this curve. You see this curve, and also, of course, look at the volume. The volume in the hammer candle. This is textbook, right? So if you see this in a textbook pattern, that these guys are definitely finding support here. It's probably on a Fibonacci or some type of resistance level, right? Definitely on some type of support. That's why it's bottoming here. Some people think this is a good buy, so they're buying. And so they're going to continue to buy if it breaks here, and it's a really nice buy, uptrend, right? We're going to talk about that later. Higher highs, higher lows. Higher highs, that's an uptrend rule. Lower lows is a downtrend. Now, these are basic concepts, but you need to master these in order to really follow the trend professionally, profitably, and think about these things all the time. What's going to cause an uptrend? What's going to be the cause for a downtrend? And that's why this group is alive, so that we can trade, we can think and trade successfully together by proper thinking, by proper guideline, by understanding this knowledge. Okay, so again, you want to look for lower wicks that are deep. Okay, you want to look for price spreads that are narrowing the angle and speed of momentum. That's like Gann's rule, and starting to change the trend here. Next is you want to look for volume supports to pick up. So actually interest, buying interest is coming into the market. So lower wicks are deep, close, price spread. I'm sure you guys have seen this pattern before if you've been looking at the market. So because it happens all the time. Like I've seen this in Matic as well. It's just you got to be patient. You have to be patient and not buy here or here or here. Just wait for the confirmation kind of thing, right? And this is one of your confirmations. But more so, the reversal is going to be your confirmation, the rule of three, and whatnot. So on your micro time frame, you can enter, or your 15, depending on how fast the trend is, how fast it is. So the buying process begins here. The buying process. The market makers move in and manage to absorb this pressure, which prices recover. You also want to think about the market makers as and be in tune with their strategies, with their understanding. If you can understand and read and think like a market maker, you are well off on your way to becoming a market maker, like a market maker trading with the smart money. And in my opinion, in my knowledge, these market makers work on time and price. Price, yes, but time is a huge factor, is a huge cause, which causes them or causes an effect in the market. So for example, like time when a candlestick closes, right? And that they move in and manage to absorb some of the pressure, because if they don't act in time, the market can either break downwards and that their position may be in jeopardy, or it might move upwards and that they miss the play. So they have to move in and manage it. And sometimes in the years, like theory we're going to talk about, is better to trade than others. Like for example, sell in May and go away. And then in the summers, basically lower volumes for that season of the summer, the 4 months or the 3 months. And then after summer, that's where higher volume starts coming in the market, starts picking up in like September, late August. And then continues all the way up to December, January, February, March, April, and all that stuff. So let's talk about topping out volume. So again, with a volume, it's important to have a price and time into the consideration. But this is the topping out volume pattern, same type of deal, but it's on the upside. So it signals It signals slowly falling demand, and that there's less buying demand, and that these candles are actually closing bearish. And so that there's actually selling coming in the market. You guys understand that, right? Volume confirms the price. Price is down. This is their selling coming into the market. If this was lower volume, then that would be a little bit of an anomaly, but we're going to understand and read what else we have to say here. So look for higher wicks, again with the wicks for this pattern, indicating rejection. Look for the price spreads that are narrowing. So again, if you break this down in a micro time frame, you'd see the waves, and the waves should be smaller. That's really, really good strategy. I'm telling you guys right now. Like, again, these setups don't come all the time. They come. These ones come more often than the other one, which is accumulation distribution. I think that's what it was, or yeah, the climax pattern. But they come. These ones come a little bit more often, so you got to be prepared for them. And so next is to look for volume resistance picking up. Right, so you want to see the volume picking up at the top here. Resistance, I meant selling, the selling supply picking up at the top. You also want to think about the market maker's timing. You know, is the daily close coming up? You know, are these guys scared? Are they going to have stop losses right here? You want to see, okay, are they going to enter shorts right here? Where's the trend? Where's the cause of volume? What's going to cause selling volume to come? Right. So anyways, the selling process begins. Selling process, especially if you start breaking this candle right here, people are going to panic, right? They're going to either take profits, and it's going to be the real test of supply. If you see big volume selling right here, you might come back with a reaction, but it's going to come back down. So that's how they control the prices, right? So the market makers move out, and they manage to distribute their inventory with prices losing strength. So these guys are basically distributing. Once you see large volume here, the market makers, the big money, there is a lot of volume, right? Which means big money is doing something. They're either selling, they're buying, but they are distributing at this point because of the fact that there is some wicks, and it's just looking bearish all day long. So price is losing strength. Market makers are selling out on strength, causing a repeatable pattern. Another question you always want to be asking yourself is what are the market makers doing? What is the public doing? You want to do the opposite of the public, and you want to follow the market makers. I mean, sometimes the public are good, but most of the time they're not. So you want to follow the market makers, and you want to basically do the opposite as the public. So I hope you guys liked this video, a little quick one for you, and yeah, peace.